Hi, I'm Ivan from Scholes Chartered Accountants. I'm going to talk a bit today about 5 basic tips to manage your business tax affairs. So number 1 tip is to keep your business affairs, your business records up to date. It sounds simple and it's actually really important with respect to your tax planning, because if you keep your business books, your income and expenditure details up to date, it's a lot easier to track where you are, to anticipate what your business and personal tax liabilities might be, and to plan accordingly. So lots of tools you can use to help you do that these days. Things like cloud accounting tools like QuickBooks and Xero can really help you keep your business records much more up to date. Tip number 2 is think about the structure through which you trade with your business. There are lots of options available. Some people just trade as sole traders, as individuals. Others use a partnership structure. Thirdly, quite common is the use of a limited company, and the use of each of those structures offers different tax benefits and different considerations. So speak to your professional advisor on that. Review from time to time, as we do with our customers, whether it's still the right structure for you. Third tip is consider what expenditure is deductible against your business profits. So sadly, and I'm frequently asked this, there is no book or list of things that are definitely or definitely not deductible. It's more of a principles-based approach with lots of law, lots of case law backing it up. So be aware of what you can and can't claim. In broad terms, expenditure which you incur wholly and exclusively for the purpose of the trade is generally deductible, but it also depends on things like whether it's capital or revenue expenditure. So complex area, again, get good advice, boost your knowledge on what you can and can't claim. Tip number 4 then is, if you're thinking of making a major purchase or undertaking any major transaction outside the normal course of activities, again, get a bit of advice. Do ask about it. Things like what you buy, how you finance it, and the timing of your purchase or the timing of the transaction can all have a very major impact on the amount of tax that you or your business pays and when it falls due as well. So that's tip number 4. If you're doing anything out of the ordinary, get some advice, get some help before you do it, not after the event. And finally, tip number 5, and this is a more broad brush one really, but do get a good advisor on your side who can give you some assistance with tax planning. UK tax is notoriously complex, an area that changes and evolves the whole time as well. So it's really, really good to think about when you want to engage your advisor to help with your tax planning. Certain times of year are particularly important on that front, actually, I would say. Definitely before the end of your business year, before the end of the income tax year, is a good time to have a chat to perhaps try and forecast what the tax implications are going to be for you for that year and decide if there's any other action you want to take. Sometimes at the start of a new tax year or start of a new financial year, it's good if you're planning ahead. Try and get yourself up to date on what the tax implications of your proposed business activities are going to be looking ahead. And also generally, if you're thinking of doing anything out of the ordinary, then try and always think about the tax aspect of what you're doing, because it is something that sometimes isn't at the forefront of people's minds, but actually ultimately always has a financial implication of one kind or another. So I hope you find that helpful. For more information, just give us a ring here at Scholes CA, or check out our website at www.scholesca.co.uk, where we also have a couple of handy guides to tax and self-assessment, which are free to download. All the best.